Do I have to pay capital gains on inherited real estate? The answer is maybe. This question comes up a lot more than you may think, so I'm going to cover the answer in this video. If we haven't already met, my name's Brad Myers, 20-year home inspector turned real estate agent with Howard Hanna Real Estate Services right here in Fulton County, Ohio. Okay, so the question is, do I have to pay capital gains on inherited property? Capital gains is basically just a tax on an asset. It could be a stock. If you buy a stock for $10 a share and you sell it for $20 a share, you pay tax on the difference. The same is sometimes true with real estate. However, with real estate, this is based off what we call the basis. So the basis is pretty much the difference between what you paid for the property minus any fees or upgrades and what you sell the property for. You pay a tax on the difference. Now with inherited property, you didn't buy that property. Someone else bought it. You just acquired it through inheritance. So in that case, you're eligible for what we call a stepped up basis. So what's this mean? Well, say your parents bought a house for $50,000 back in 1950. Your basis is not $50,000. You have a stepped up basis of whatever the property is worth when you inherit it. So if the property is now worth $300,000 when you inherit the property, that is now your starting point or your basis. So if you decide to sell the property for $310,000 and you didn't make any repairs or improvements, you could technically be on the hook for $10,000 in taxes. Now, an easy way to avoid paying capital gains is to sell the property for what it's valued at. So if it's valued at $300,000 and you sell it for $300,000, then there's no gain, no tax. Now, if you sell the property below the appraised value, you can actually claim a loss on your taxes. However, there's a limit to how much you can claim. Now, some people may be wondering, well, why would I take a loss on it? Well, say one of your children would like to have the house, but they can't afford the full market value. This is a good way to get them into the house, and you can have a deduction on your taxes. Now, let's say you really like the house and you decide to make this property your primary residence. Do you have to pay capital gains when you sell it years on down the road? And the answer is probably not, as long as you meet a couple of requirements. Number one, you have to live in the house for at least 2 of the past 5 years. That's 730 days, is 2 years, of the previous 5 years. And it doesn't have to be a consecutive 2 years. It can be 6 months in, 6 months out, as long as it comes up to 2 years. And then number two, you can't make more than $250,000 from the sale of the home if you're filing single, or $500,000 if you're married filing jointly. Now, some of you may be wondering, should you make repairs to the home before you sell it? And the answer is probably not, unless you're making the repairs to enjoy for yourself. I've got a link to a video up here. It's going to talk about the 7 things not to fix when you're getting ready to sell your home. If you're watching this video on Facebook or another platform, I'll have a link to that video down below in the comments. Thanks for watching. Take care.